Hi there, good afternoon. You're tuned into ET now, and this is Market Fatafat with me, Sharon. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And markets, yes, we were at the kissing distance of the record high levels, but then we've given up all of those gains, and we are sub 18,800 right now. We're actually sub even 18,750 coming in for the benchmark indices. A lot of stocks to talk about through the course of the next 1 hour on who are the buzzers and which companies are not making the cut in today's trading session. But before that, let's talk about a company that gains in today's trading session, that is Skipper. We have the management of Skipper to talk exactly about why the stock is buzzing in trade. 19.4% uptick is where Skipper is logging in gains today.
Cheryl, 19.4% is what we're seeing in terms of gains. Surely a strong move that is coming in terms of the growth for the company, especially they've won an order of around 1,135 crores. And we're joined by the management, like Cheryl was saying. Sharan Bansal, director at Skipper Limited, is joining in with us. Thank you so much, Mr. Bansal, for joining in with us this afternoon. And obviously, let's just start by talking about this big order win that you have coming in. Could you share more details on that, and especially in terms of when will the execution actually start for this order, and is it margin accretive?
Yes, of course. The order that we have secured right now is approximately 1100 plus crores. This order is split between domestic T&D from Power Grid Corporation, which is approximately 700 crores, and the balance is coming in from export markets, primarily in the Middle East and North Africa, from countries like Egypt. We have been very bullish on the overall transmission and distribution demand scenario in the recent years, thanks to the push in renewables. The domestic market, which has not been so exciting for us for the last 4 or 5 years, we are seeing a good revival in that in this year. So this 700 crores order coming in from Power Grid Corporation is a testimony to that. And we are expecting more business to come in from the domestic markets as well. And yes, all orders with thanks to the good demand scenario definitely are margin remunerative for the company. We are expecting a 12 to 13% EBITDA margin for new orders as well.
Okay, surely you are seeing that revival, you were talking about coming in the domestic space as well. I just want to understand also in terms of, you've indicated at the end of FY23 that the pipeline is over 10,000 crores. So what is it that you're looking like? How is that pipeline looking like right now? And is the traction, like you mentioned, more domestic? So even export, is that also seeing a revival then?
We are seeing good growth in both domestic and international markets. Presently, our order book, which is about 5,300 crores plus, is split approximately 70-30. So 70% being domestic and 30% being exports. So we are seeing good traction on both sides. Again, like I mentioned, thanks to the large investments in renewable energy across the globe, which is leading to power transmission investment. So we are expecting a growth of 25% CAGR over the next 3 years quite comfortably, thanks to this order book which we have and the market potential of new orders which are going to come in for the company.
Right, Mr. Bansal, this Shell was joining in the conversation, and like you mentioned, you are expecting that 25% CAGR revenue growth over the next 3 years. You in fact reiterated this particular statement of yours. If you could tell us, then the revenue target for FY24 would be around 2,500 crore rupees?
Yes, quite comfortably we should cross that number.
Right. Let me just move ahead then, and let's talk about your margins in the quarter gone by. It had dipped it has dipped slightly to about 10% versus 11% earlier that it has seen. Could you tell us what sort of a margin outlook you have going ahead?
For sure. Overall, the margins of the company need to be looked at on an annual basis and not on a quarter basis. For an overall last year basis, we did have a very strong increase in the operating EBITDA margins of the company. The margins, final margins, were impacted by some forex losses which had accrued because of the sharp depreciation in the Indian rupee. However, what we are focused on is the operating EBITDA margins of the company, and they continue to be healthy, and they definitely On the back of these present orders as well as the new orders coming in, we expect the margins to continuously improve in subsequent quarters as well.
Okay, so continuous improvement is what we're expecting in terms of margins going forward. But what about the debtor days? That surely has improved. 70 days as against 100 days, what we saw in FY22. Is there more room for improvement there? And what about the overall debt of the company as well then?
The overall debt of the company continues to be in a healthy position. We have, despite the growth in revenue, we have brought down the absolute debt of the company by close to about 70 to 80 crores in the last financial year as well. Not just the debtor number of days, but we also expect improvement in the inventory number of days, which continue to remain high right now. However, we are expecting improvement in that in the quarters to come with the increase in revenue output.
All right, then, Mr. Bansal, we'll leave it there. Thank you so much for joining us on the show, giving us a take on the new order win, as well as where your revenue and revenue growth as well as margins are headed for Skipper going ahead. And also congratulations on this new order. The stock is definitely taking this pretty well, 19% uptick coming in for Skipper. So that was also, you could consider the first stock for this edition of Market Fatafat. But like I was saying, Vinny, the market's definitely at near the day's lowest point as we speak, 0.5% downtick coming in for the benchmark indices. 18,750 is broken for the markets, as well as if you look at the advanced decline ratio, the market breadth definitely has weakened, and the advanced decline ratio for now it is neck to neck.
Absolutely. You know, from those morning green where we were expecting, it's surely seen that downfall coming in there right now. The markets, nothing exciting there, but surely let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, we're joined by Samit Chauhan joining in with us, while from the research team, today we have Ashesha as well as Harsh joining in with us. Very good afternoon to all three of y'all. And let's get started with the first stock that we're going to talk about, and that is, I think first we could say Skipper, but we'll start with Aavas Financiers then, and that's the one I'm going to talk about. The shares of Aavas Financiers actually jumped today as much as 3% intraday when I last checked. And what is the main reason behind this is that we saw a bulk deal that was happening in the stock on Friday, where we saw the FPI Investors Small Cap World Fund Inc. sold around 7.08 lakh shares in the company. That is around 0.9% equity stake in the company. Now the shares, when you look at it, were sold at an average price of 95.71 rupees per share. So keeping an eye out on that one. We will also, the buyers are something that is important to watch out for. But as of now, Aavas Financiers is buzzing in trade post this change of hands that we've seen coming in there.
All right, moving on, let's talk about Electronic Smart India. That particular counter has hit a 5-month high in today's trading session. If you look at the stock price, last time I checked, the stock was trading higher by approximately 6% or so and touched a high of around 84.7 rupees per share. It has moved in lower from those elevated levels. However, the company has said that they've commenced commercial operations of their new exclusive brand outlet in Gurugram in Haryana, and post that news, so you saw a good uptick on the company, still holding on to gains about 2.4% in an otherwise weak market.
Absolutely. Let's move on and talk about the first stock on the charts, and that is HDFC Life, Samit. When you look at today, it's holding on to gains of around 0.8% in trade. Last 1 month, almost 10 to 11% gains. What are the charts indicating now for HDFC Life? Should we expect a run up there, or maybe some bit of a correction is what we could see before a run up?
See, some bit of breather or time-wise consolidation can be on cards, considering the fact the stock has already moved up quite sharply in the recent past from the levels of 460, and now as we speak is trading around 640. But considering the broader degree chart structure, the stock is on the verge of a breakout from its previous swing high of 612, 614 on a closing basis. So once that happens on a closing basis, we could see extension of this move probably towards 645, 650 in coming weeks. So overall, the bias remains positive, and importantly, in the recent rally, if you see, the volumes have picked up substantially. So that clearly indicates the kind of buying interest in this particular counter has. So overall, we remain bullish. In case of any decline or minor profit booking, any dip towards 600 590 would be a good buying opportunity for HDFC Life.
All right, moving on, let's talk about Shriram Finance, Ashesha, big block deal that took place in today's trading session.
This is the reason the stock was sitting with the gains of over 4% as we speak. About 2.6% equity changed hands via block deal that took place today morning. About 9.92 million shares changed hands, and TPG is the most likely seller to this particular block deal, and deal is likely to be worth about 1400 crores. In fact, we spoke to the management of Shriram Finance earlier in the day, and the management said that TPG has been an investor for a very long time and they possibly might have sold stake. As far as buyers are concerned, many domestic mutual funds, FIIs could be the possible buyers, but the management did not have confirmed information. Of course, on the back of that block deal, the stock is buzzing in trade today. TPG likely to have sold stake, and the stock is gaining over 4% as we speak.
And on that note, like Ashesha was mentioning, we spoke to the management as well. Let's go across and listen into Umesh Revankar, the Executive Vice Chairman at Shriram Finance, and what he had to say about this deal as well.
To my best of my understanding, I think it is a total sale. Nothing is left in Shriram Finance Limited. But TPG has been our partner for more than 15 years. And they continue to be our partner in insurance venture. So they have been our strategic partner, well-wisher, and we continue to work together. The TPG has been with us for quite a long time, and they have every scheme or every fund has a limitation. And I think this particular fund, they have been, I think, with us for more than 7 or 8 years. And they have to sometimes retire the fund. So, and that's the reason. So, however, we are quite happy with the TPG, and definitely we expect them to partner with us in our future ventures.
All right, moving on then from one block deal to another one, but this one took place on Friday. Harsh, do you have more details on Kalyan Jewellers?
Well, yes, absolutely, Cheryl. So we did see 6.2% shares exchange hands for Kalyan Jewellers on Friday, and we saw Heidel Investment Limited sold around 6.5 crore shares, which roughly translates to 6.2%. What we also saw in terms of buying interest, solid buying interest coming through. We had the likes of Franklin Templeton picking up over 1 crore of those shares. We saw BNP Paribas pick up 1.5 odd crore shares as well. We had Citigroup also pick up around 50 lakh odd shares. Nomura also picked up over 1 crore shares. So we saw good buying from huge institutions coming through. Of course, as part of their funds, different funds of each of these institutions picked up quite large in terms of quantity, some of those stakes that they bought up. And on the back of that, we did see Kalyan Jewellers buzz in trade even today. In fact, the stock is up 20% over the last 5 odd trading sessions, with very solid gains. And over the last 1 month also, we've seen solid interest in Kalyan Jewellers. And on the back of that deal, it continues to be in focus. Of course, BNP and Citi among the buyers.
Okay, let's move on and talk about IRCTC on the charts then, Samit. And when you look at it for IRCTC in the last 1 year, it did touch at one point of time about that 700, 750 levels. It was around those levels, and then it saw correction coming in. Now again, it seems like it started picking up pace. What are the charts indicating for this one? How do you think that 700 level will cross that and it will sustain above those levels now?
See, clearly this has been a laggard for quite a long time now. But recently, stock cemented its position around 560, 580, and then some sort of revival started. Considering Friday's decisive breakout from its previous hurdles of 660 on a closing basis, along with sizable volume. So coincidentally, the stock managed to surpass its 200-day simple moving average as well. So overall, the chart structure looks quite robust. And overall, with a short-term perspective, we would expect this stock heading towards 690 first, and then probably it can surpass the 700 mark as well. So overall, the bias remains positive in IRCTC, and after a quite long slumber phase, this stock seems to have come out of its congestion zone. So we remain a bit on this counter. 640 seems to be a very strong support. As a trader, one can buy at current levels 690 and 710. These are the next levels to watch out for.
690 and 710 are the next levels to watch out for IRCTC. That's the word coming in from Samit. Let's move on and talk about Why is this one in focus? Because yes, last week there was a fire incident that took place at one of the factories. Now, in terms of an update that has come in from PM, they said that they've resumed the production in the undamaged portion of the building. The process of ascertaining the loss and insurance claims are still underway. Company has a second building located in the same unit as well, which was reserved for expansion purpose. In this building, assembly lines are being set up and normal supply will be achieved from this unit in the next few days. So normalcy is expected in the next few days in another building that they have already in the same area and the same unit. So on the back of that, we saw a bit of a buzz coming in for PM today.
All right, moving on, Samit, let's talk about Bajaj Finance. And last time I checked that this one was holding on to gains in an otherwise weak market. But Bajaj Finance, where do you see this one headed from here on?
Yes, it is still holding on to those gains. Stock has already given a spectacular rally in last couple of months. There has been no stopping. Without any major, decline or time-wise consolidation, the stock is continuing its upward trajectory. And today also in such kind of, weak market, this stock is holding on to its gains. So overall, the bias remains positive and the stock is clearly heading towards its next important hurdle of 7,500. So as a trader, one should certainly stay put. Fresh buying is not advisable at current level considering the, risk reward segment, but we expect the stock heading towards 7,500 where, one can certainly reassess the situation.
All right, that is the take coming in on Bajaj Finance. Let's talk about Nykaa. And remember, Nykaa on Friday had held its investor meet or analyst meeting or investors meeting. And post that, a lot of brokerages have come out with their view on Nykaa, where they're saying that Nykaa will see a steady margin expansion as the beauty and fashion e-commerce market continues to grow in India. Also, global brands continue to be interested in the Indian market, and with Nykaa being their preferred partner, the company management has highlighted that in the meeting. They also said the strong growth in high income and upper middle class household will drive the online retail space. So post the analyst meet and the commentary coming in from that, you have Jefferies, which has said that Nykaa's profitability to be led by factors such as better customer retention and its own labels. They're saying the strong tech backbone as well as rising e-commerce penetration and increasing order frequencies will drive growth for Nykaa. This is the word coming from Jefferies, while on the other hand, you have Kotak Institutional Equities, which has maintained a buy stance of the company with a fair value of 210 rupees per share. They're saying that the healthy growth momentum will sustain for the company. And not just that, you have also Citi and JM Financial also, who've given a very positive note on Nykaa post this particular investor meeting. And because of that, you can see the stock is still holding on to gains about 2.6% as we speak.
Okay, let's move on and talk about ACC. And Samit, when you look at it, this one has not done anything exciting in terms of a return for an investor. At the current levels of around 1,870, is it a good buy?
No, the stock is, clearly sulking today. It has not participated in the recent rally. Gradually, it moved towards its important cluster of hurdles. So 1850, 1880, we are seeing as a strong resistance zone, and since last 7 to 8 trading sessions, this stock has been facing resistance around it. And today we are seeing breakdown on hourly chart. So from here on, at least 1750, 1760, these are the next levels to watch out for. So stock can see further weakness in the coming session. So overall, we expect 1860, 70 to act as a sturdy wall until the time it does not breach those important levels. We expect consolidation with a negative bias, continuing in the SEC. So on the higher side, 1860, 70, and on the lower side, 1750, 1700 is the next levels to watch out for.
All right, moving on, Ashesha, why is Jindal Steel in focus today? That's JSPL.
Yes, JSPL is in focus on the back of a note that has come in from Kotak, where they have upgraded the stock to a buy rating, and the revised target price now stands at 740 rupees per share. Remember, this is their top pick in the sector. They say that JSPL's capacity could increase by as much as 65%, and that they could see the next 12 months as a transformational period for the company. Higher backward and forward integration could help the company achieve margin expansion over the period FY23 to 26. They also say that large part of growth capex that the company has lined up could come in from internal accruals. Strong balance sheet and sector leading growth prospects is why they believe re-rating is required in the stock. They've upgraded the stock to a buy with a target price of 740, it being their top pick in the stock sector, and that is the reason the stock is buzzing in trade today.
Okay, that's a buy coming in from Kotak, but Samit, would you also say Jindal Steel is a buy and give it a thumbs up?
Yes, in fact, this stock is clearly bucking the trend. If you see other peer counters from the metal counters, they are seeing some profit booking happening since morning. But this stock has stayed firm, above its important levels of 545, 550, and it is clearly holding on to its gain. So overall, the structure looks quite sturdy. And from here on, we would expect continuation of this move probably towards 590, 598 over the next 2 to 3 trading sessions. So overall, within the metal space, this stock looks quite robust, and we expect this, upward trajectory to continue.
All right, moving on. Harsh, KC International, why is this in the spotlight?
It's Analyst Day, Cheryl, and on the back of that, you can see the stock is buzzing on the back of all the details coming through from the Analyst Day. So let me take you through some of those details. One is that they've guided for a 15% revenue growth in FY24, and they see that sustaining beyond that as well. So they are expecting that growth of 15 to 20% over the short to medium term is what the management has suggested. With it, they believe margins will continue to improve. So they are expecting a 50 bips improvement in margin. 6% was where the margins was at exit FY23. They are expecting that number closer to double digit, 8% by exit FY24. And in FY25, they are expecting to clock double-digit margins. So that continued improvement in margins is expected. That's also a major positive, along with the revenue growth looked at very positive. When I'm looking at what the management says with regard to orders, they are suggesting that they're going to be selective in their order wins, and they're only going to look at orders with healthy margin profiles. They're expecting debt to hold at similar levels through FY24 as well. And we did speak with the management as well, and they suggested that they are expecting receivables from Afghanistan to come down in FY24. That's the other key positive.
Absolutely, and we will go across and listen into the management as well then and what they had to say. Vimal Kejriwal, who is the MD and CEO at KC International, what more did he say in terms of margins and growth? Let's go across and listen.
H1 we should be around 6% from the current 4.8 what we had last year, and H2 we should be around 8%, so average 7% for FY24, and exit was close to double digit. We said anything between 9, 10 or somewhere around that, and we expected that FY25 we should be in double digit or so.
All right, moving on then. Let's talk about RITES, Samit, and where do you see this particular counter headed from here on? How are the charts looking for RITES?
This stock is, one of the stocks, which has been maintaining its, a series of higher highs and higher lows. Recently, stock prices consolidated, cemented its positions around 89 exponential moving average. And after a long, consolidation on Friday, we witnessed a good price volume breakout. So from here on, this stock is poised for a good move towards 420, 430. So we expect this stock to continue its upward trajectory for next at least couple of weeks time, and 420, 430, these are the next levels to watch out for. As a trader now, 380, 370 seems to be very strong support. So one can keep a stop loss below this important levels and certainly go long at current levels.
Okay, keep an eye out on RITES and those levels over there. Let's move on and talk about VRL Logistics. This one is in focus as we have a brokerage note coming in from HSBC where they're maintaining a buy on VRL Logistics, but they've hiked the target price to 800 rupees per share from previously 650 rupees per share. What they see is that the EBITDA margins, they expect that to be expanding by around 130 basis point to around 16.5% in FY24. Also, they see that the branch network expansion and tailwinds from the industry formalization is something that could aid FY24 growth as well for the company. And they see a strong double-digit coming in for the volume growth for VRL Logistics. On the back of that, we've seen a slight bit of an up move, but as of now, the stock has given up those gains and trading with a decline of 0.2% in trade.
All right, let's just take a note quickly on the flash on the bottom of your screen. Mubadala Investment has announced a partnership between investing companies, Princeton Digital Group, as well as Tata Power Renewables. So we will get some more details on that particular front, but just taking a note, given the fact that there is an arm of Tata Power also mentioned in that particular flash. But let's move on. Let's talk about Som Distilleries. And this particular counter is in focus because remember that they had spoken about starting a production in their Odisha plant for a particular beer, and which their company has said they've commenced the trial production with enhanced capacity at the Odisha plant, and they've also gone ahead to say that the commercial production is likely expected early next month. So on back of that development, you have Som Distilleries that is in focus. You can see the stock saw a sharp spike when the news actually came out. From there on, it sustained onto the gains of about 3% as we speak.
Okay, that was stock number 15 for y'all. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.